webinars geared
Hey,
towards serving
Kim.
our, yes.
Sorry, I just hit start meeting. If you could just
Oh,
start again. Thank you.
yeah, of course. Hi, everyone. Good morning. Welcome. Thank you so much for joining us for this event, which is a part of our Small Business Bite series. Today, I'm sorry, we have a few webinars geared towards serving our business community that are leading up to our Small Business Summit and Expo happening on Friday, May 8th. If you haven't registered yet, we hope you'll consider joining us. We will have a number of workshops, opportunities for connecting, and a really great expo featuring a number of local small businesses in the area. So if you are interested in learning more, I'll go ahead and put the link in the chat right after this. Just a bit of housekeeping as people are joining the call. You are all muted right now, and we are also recording this to share out afterwards. So if you have any questions, please put them in the chat. And with that, I am happy to kick things off by introducing our president and CEO of the St. Paul Area Chamber, B. Kyle, who is going to share why we think it's so important for us to be hosting this event today. All right, well, thanks for being here, B. I'm passing it off to you.
Thanks, Kim. Good morning. Good morning. We are recording this in April, though we will make this webinar available because it will be timely throughout the course of the year. And I'm so grateful that you took the time. The timing of it certainly fits in well with our Small Business Summit and Expo. And what I'll tell you is we felt compelled to share this out with our membership because of our own personal experience as we navigated medical and dental renewal process. So I'll give you a little backstory. So your chamber really operates as a small business. We have 27 employees. We carry a full complement of insurance, including medical and dental. Q3 of every year, we meet with our broker. We do business with North Risk Partners. We're very pleased with how they work with us. So we have a review, and at the end of 24, we were facing 20+% increase in our insurance costs for 2025. Really, really challenging for us. And we really didn't know what to do. So Charlie Sievert's on the call, and Charlie is the lead broker at North Risk for us, and he helped us explore our options. How could we pivot in 25? What could we do to manage our budget? And he introduced us to ICHRAs, which are individual coverage healthcare arrangements, as an option to consider. And I have to confess, I was really skeptical. I had no idea what these were. Were they some cute new product that really wasn't going to fit, because we were a serious business after all. And Troy, got a chance to meet Troy Holman and his team over at Benafica. And they introduced us to what ICHRAs are, how they operate, pros and cons. It took a lot of time with us. And we ultimately chose an ICHRA for our team in 2025. And at the end of last year, again, when we were doing our annual renewal, we talked to our team about what was your experience with this program? Did you want to stay with what we have? Did we want to return to a traditional small business group plan in 26? We chose to stay with ICHRA for 26. This is now our second year. Very happy with our decision. I really wanted to share this process with you because if you're a small business owner, employee, you simply want to learn more, I really want to encourage you to take the time to do so. Now's the time, right? We have several brokers in our membership. I talked to several of them to say, help me understand what our options are. What is your experience with ICHRA? What do you consider as resources for small business? And we couldn't be more pleased with North Risk and Benafica. I encourage you to do your own research, and because you have really good options. And I wanted to share our story because we're not the only small business facing challenges as it relates to medical and dental options. We wanted to share our story with you and introduce you to this really fascinating concept with these ICHRAs. So I'm going to turn it over to Charlie Sievert at North Risk and Troy Holman over at Benafica. Thank you, gentlemen, so much for how you've taken care of us and for taking the time to share what you know with our membership.
Great. Thanks, B. Thanks to the Chamber for having us. We appreciate your partnership. Again, today with me, I've got Charlie Seifert. I brought him along with North Risk Partners because really when B and I and the Chamber have been talking about doing something for small businesses just to educate, because for what be probably about 6 months. And finally, we were able to get something scheduled and coordinated. On a day-to-day basis, we do take a lot of questions from businesses, whether they've got traditional group plans today, whether they haven't offered benefits before, doing some different version of benefit offering. So really where we wanted to go with this is when I put this together is, I built it where an employer coming into the decision-making process really wanted to set the stage and give you an idea of what that landscape looks like. So that's why Charlie's here. He's going to touch on what traditional group plan options look like, where some of the challenges might be. Obviously, Bea already shared her story. We'll touch on that a little bit more, as well as ICHRAs and QSEHRAs, the background on that, who's that right for, what does this mean? I'll spend most of the time talking about ICHRA today, but there is also a different HRA product called QSEHRAs out there that could be right for your business. And then really the mechanics of an ICHRA, trying to keep it high level. You don't need to be an ICHRA expert. That's what North Risk Partners is there for, and that's what we're here for. We really walk you through that process. So, if we were to look at as a business, if you're looking to offer health benefits to your employees, you've got really 3 different options, right? You could look at the group health plans, the traditional group health plans as we know it. There's a couple different versions of that Charlie will dive deeper into in a moment. Then there's those HRA-based products, ICHRAs, QSEHRAs, those types of things. We're seeing a lot of movement that employers are moving from that traditional way of offering benefits over to the new modern way. And then, we come across a lot of businesses that we take a lot of calls. Hey, maybe you're doing a taxable stipend and want to talk about, are there any other tax benefited arrangements that I could get into? And that ICHRA-based HRA model is a perfect transition to that. Or simply you're not offering benefits at all. The group market, is scary, confusing. You don't know where to start. So, again, lots of options out there for you. If we're really looking at what that all means, if when people think of group health benefits or your group plan, you're really thinking about that traditional way where your employer has, on average 2 to 3 different options that they chose, and you're selecting as the employee one of those options. Your employer is contributing a certain percentage. There's some rules in place that will dictate how much participation you need, and that level of contribution is part of that decision-making process. And where things have moved is really now making it a financial decision. So you as the employer are really making a financial commitment, determining how much you want to provide to your employees, and they're able to now own that insurance decision. They're out there on the individual market choosing which plan best meets their needs based off their budget, their health, where they live. So, those models really, it used to be just, hey, let's choose our plans, and these are what the employees are going to have to choose from, to now, again, how much do I want to give my employees and let them own that. So, again, where we can go from here is really bring Charlie in to give us an overview of what that traditional group health insurance market looks like.
Sounds great. Thanks, Troy. Charlie Sievert with North Risk Partners, obviously a very proud member of the chamber, and I'm a St. Paul boy. Very proud of that. When talking to Bea and talking to Troy, we wanted to give a little bit about kind of the why. Why is ICHRA evolving? Why has it become more and more popular? Why is it one of the fastest growing market segments? Part of some of the challenges that we're seeing with traditional group health plans. So we wanted to kind of do the little basic 101, how it works. So, so an employer selects a carrier, an employer selects a plan, and it makes it available to the employee. So it's employer sponsored. Under this type of an arrangement, employers have to contribute at least 50% of the employee-only premium. Now you can do more, and you can contribute towards dependents. But if the employees are sharing in any of the costs, whether it's for single coverage or dependent coverage, of course, you have to have a legal document. It's called a POP plan, a premium-only plan. that allows both the employer and the employee to pre-tax their premiums. So what are some of the advantages? One, obviously you get access to, different carrier options. So you get options of different carriers, options of different networks. One of the things that we'll talk about on a group plan, you not only get statewide networks, but you get national networks. Now you can do narrow networks. There's a lot of different things that you can do with a small group plan, but typically the network itself is significantly larger than what you'll see in the individual plan. The other thing is most are familiar, right? With this is pretty common that many small and large employers have a traditional group plan. So most employers understand it, most employees understand it. It obviously helps attract and retain employees. On the employer side of it, again, you can decide who the carrier is, you can decide who the plan is, you can decide who the networks are. Next slide, Troy. So let's kind of peel the onion back a little bit more. Let's just talk specific about small employer plans. So small employer plans are defined if you have 50 or less employees. So if you remember, the advent of the ACA goes back to 2014. So some of you may or may not be familiar, but I'll kind of interchange community rate and age rate. So if you remember back when this was introduced in 2014, in essence, everybody's paying the same, meaning it doesn't matter if you're an employer and everybody in your group is terminally ill, you're going to pay the same as somebody who is perfectly healthy. So that's what community rate means. But in essence, how it works is there's basically 65 different rates from 0 to 65. The younger you are, the less it costs. The older you are, the more it costs. Another advantage is, guaranteed issue. They can't deny you based on your health. Participation is actually 75%. So you have to have, of the benefit eligible, 75% less credible waivers. Again, the employer contribution has to be at least 50% of the employee-only premium. And if you recall, under the ACA, there's basically 4 different plans. There's bronze, silver, gold, and platinum plans, and each one of them has an actuarial value. But here's some of the challenges that employers are starting to see in the small group market. So for the last 2 years, we probably have seen the highest increases in the small group pool since the advent of the ACA. So I always say, what's the why behind it? Why are we seeing, because wasn't the ACA supposed to make rates affordable? We kind of laugh about that a little bit. But what are some of the things that are driving up the cost in the small group pool? Well, one, healthcare costs are going up. But one of the things that's happening is you got a couple carriers, and there's probably more than a couple carriers, that are basically cherry picking the small group pool. And they're trying to identify the low risk profile small groups. They're pulling them out of the small group pool, and they're moving them into level self-funded arrangements. So think of it this way. So think about the good eggs are leaving and the bad eggs are left, which is only going to drive up costs. So that is really having an impact on these ACA community rated plans. And so it's getting to the point where employers are looking for options. And I know that we're going to talk a little bit more about ICHRA, but when does it get to the point where it's not affordable for the employer or the employee? Next slide, please. Well, I don't know if it necessarily gets better on the large employer side. So you got small group and then you got large employers. So you probably have heard the term applicable large employer. So that's full-time and full-time equivalents greater than 50. Now, what's a little bit different under this large group market segment is your rates are based on your experience. And so your experience is going to drive what your rates are. One of the other things that's a little bit different about a fully insured plan is it's composite rated. What does that mean? You have one rate for employee, one rate for employee plus spouse, one rate for employee plus children, one rate for family. So it's a composite rate. We have already talked about what's going to determine or drive your renewal is how the plan runs. What is your utilization? There's also participation requirements. In this setting, in a large group setting, it's 50% of benefit eligibles. And again, the contribution is similar to the small group. When you're a larger employer, sometimes you get a little bit more flexibility in customizing deductibles, copays, and networks. However, similar on the challenge side is now, because you're an applicable large employer, you're subject to the employer mandate. So there's two parts of that, right? Minimum value and the affordability. So those are two key pieces to the employer mandate. But similar, when we call it the tweener group. So you could be an applicable large employer that has more than 50, but you have less than 50 enrolled. But I would say anywhere from, it could be 20 to 100, that's a large group. There's going to be a lot of volatility in that market segment. You can have one claim, two claims, three claims that could adversely impact and drive up your renewal and your rates significantly. So predictability is really challenging because you have that volatility. And again, I know that we're going to get in a little bit more detail why small and large employers are giving consideration to ICHRA. So let's talk about level self-funded, and this really kind of tells the story, right? Of again, been honored to be able to serve as a benefit consultant for the chamber. They did have the ACA fully insured plan, and there was a time and moment where their risk profile was good, and we moved to a level self-funded plan. So it's level self-funding is kind of, think about it as in between fully insured and a traditional self-funded arrangement. It looks and feels a lot like a fully insured plan. Within the level self-funded plan, there's stop loss insurance. So not uncommon where any claim above, let's say $20,000 to $30,000 gets backed out because you're paying for that. That goes to reinsurance. One of the advantages is if you have a good claim year, meaning if you paid in more than they paid out, and you could get a return of premium in the form of a surplus. The tough part is what happens if you have that one or two large claimants. It could blow up the renewal, which could blow up the plan, and that presents a lot of challenges, for employers. So if you look on some of the challenges, again, initially, the short-term savings could be nice, but oftentimes in a five-year claim period, they say you're going to have 2 bad years and 3 good years. Well, how bad are those 2 years? I mean, this year, in my book of business, I had to deliver in some scenarios over 100% rate increase. That's just crazy. It's just not sustainable. So again, back to the problem, you could have 1, 2, 3 high claims that could adversely affect everybody. There's a lot of volatility in that market segment. And again, it gets back to that, what can the employer afford? What can the employee afford? And that's where we're kind of excited. We're going to talk more about ICHRA and why this is becoming an option to consider. The only other thing that I'll say is not uncommon. Sometimes we have some clients that will maybe move to an ICHRA plan, but there's still some advantages of having your other ancillary benefits in a group chassis. Things like your dental, your vision, your life, your short-term, long-term accident, crit. So you can do a little blending of both, but it's not uncommon where employers that go to ICHRA that they still keep their ancillary benefits in a group chassis.
Great. Thanks, Charlie. Again, as Charlie alluded to, employers are starting to move away from traditional group plans for those reasons, right? When as an employer, you're trying to set your budget, it's just tough to be able to do that on a year-on-year basis. And all of a sudden you get blindsided with a 80%, 100% renewal increase, and then have to determine how you're going to manage that. Are you going to pass that on to, or a portion of that to your employees? How much can you absorb? So, based off of when ICHRA really started the legislation back in 2020, as you can see, kind of the growth trajectory of what employers are doing. Looking at last year, really the largest segment that grew was that large employer, because of course renewals are a lot more volatile. There's based off claims history, and we're seeing that movement. But as you look at it, small employers are still have the majority of the ICHRAs getting done. So when looking at this option, you're starting to hear more and more about it almost every year, and that growth is showing you that it's here to stay. So if we look at businesses, I mean, who's ICHRA right for? And the answer is pretty much everybody, right? You could start out, you've never offered benefits before. It's an easy entry point, right? You'd be able to set how much you want to provide to your employees. There's really no participation minimums that you have to worry about, and you're compliant. So again, we've seen this year even some employers that are that ALE, large employer over 50 that are subject and paying IRS penalties, are fit into that bucket as well, and have offered now ICHRA to get compliant and just passing some dollars over to the employees to be able to purchase insurance. That small group market again, it's that next first step, right? You could go into that ICHRA or QSEHRA to really more or less stabilize your budget and really give employees more flexibility to be able to purchase the health plan that best fits their budget and their health needs. Those mid-sized employers, they kind of fit that bucket where they're that just maybe over 50 or they went that self-funded route. We've seen a lot of renewals, which are surprisingly 40, 50, 60% more. We're talking real dollars, and there's other ways that we can structure this where you can keep an affordable health plan offered to your employees. And of course, that large employer group, again, that's the fastest growing segment because of those reasons as far as claims volatility. So B was able to share a little bit about their move to ICHRA. Again, we were thankful that we were able to be part of this process to help her really weigh why, what does ICHRA look like compared to what they're currently doing. I'll call on Charlie a little bit, who was part of kind of that whole evolution and process. He shared a little bit already. Charlie, you want to add anything about the move to ICHRA?
Yeah, and I think it's becoming more and more common. There was a time that the chamber had a traditional small group ACA metal level plan, and just rates keep going up every year. Not only do rates go up, but not uncommon that the deductibles and the out of pockets go up. And like I said, in the last 3 or 4 years, level self-funding has become extremely popular in the small group market. And so you got some carriers that have basically gone in and they're looking to pull out those lower risk groups into level self-funded arrangements. But then you got I would call it the traditional markets, like the health partners, the Blue Cross and Medicas, that didn't like that. They didn't like that their low risk groups were getting cherry picked out to different carriers. So they started to get in the game of level self-funding. And so again, early on, it created some nice savings, for the chamber. However, like I said, not uncommon, very, very common. You could have one prescription, you could have one high claimant that could basically blow up the renewal, that could adversely impact, because when you go from fully insured to level self-funding, your rates are based on your experience. And so that became frustrating for the chamber. So that's when we started exploring and saying, what else is out there? And so that's a little bit of the backdrop on the chamber.
Great. So let's rewind a little bit. A lot of talk about obviously the landscape of it, the group markets, who's looking at it, but let's rewind and really look at the basics. What's an ICHRA? Individual coverage, health reimbursement arrangement. At its simplest form, the employer's setting the allowance. How much do you want to provide to your employees? Employees purchasing a health plan, and they're getting reimbursed. And that's really the starting point of where ICHRA was, and now it's evolved, and there are different ways that an employer can offer an ICHRA, and we'll get more into that in just a moment. But employers are looking at it again. There's a theme here, right? Predictable costs. Let's stabilize that budget. I don't have to worry about participation. You know, I'm offering this plan, I only can contribute 50%. Ooh, it's too expensive for the employees. Now not enough people enrolled, and now what do I do? And then really the flexibility really gives the flexibility to back to your employees. It's also helpful in this day and age. There's a lot of remote workers. You know, sometimes it's hard to find a group plan that fits in that's affordable, that fits everybody. So we do a lot of things for businesses that they've got employees in different states, different rating areas, be able to customize that contribution strategy to really benefit each employee no matter where they live. So when we're looking at it again, if we look at, this is a illustration of the growth of an ICHRA and who's taking the ICHRAs, right? So this is a stat from ICHRA Council, 2025, 88% of the ICHRAs and QSEHRAs that the employers offer to the ICHRA QSEHRA were fewer than 20 employees. You know, again, a lot of the growth is that small market, but really the fastest growing segment is that large market. So, you know, ICHRA is right for every size business. It's just not this small business or have never offered benefits before. You know, employees like the ICHRA, the flexibility. They can find that plan. They can set their budget based off of their needs, right? They again, they're not alone, and we do support them to help them find the right plan that has their doctors, their networks. The coverage stays with them. You know, if they leave the employer, they can keep that plan. They just take over the payments, and all is good. You know,
can I jump in on that, Troy?
Yeah.
This is for me what I found most attractive, and I want to make sure people are actually hearing what Troy is saying. When your team of, let's just say 30 people is exploring an ICHRA, you go out, it's as if you're on the public market. You get to choose based on your health needs and your health experience, any provider you want within the network that's presented to you. High deductible, standard deductible, high premium, you know, you get to decide unique to you. That's what we loved. Some people really want gold level in terms of deductible, in terms of payment towards prescriptions. Others never go to the doctor. What they wanted was the lowest price. And I loved getting out of the business of trying to find a happy medium between what our team members wanted. So for me, Troy, this was everything that folks get to make their own choice for their own life experience. And all we had to do was figure out how to provide a premium that replicated what we were doing before. It was really helpful. Great.
Thanks for adding that. That's definitely what we're hearing from employers after they've had a group plan and they go back to this model. You know, that's a major benefit for both employees and obviously employers. So, you know, let's really get into kind of the mechanics of an ICHRA. Again, we'll drill down a little bit deeper, but still have this higher level. You know, when you're offering an ICHRA, you could do it one of two ways. What I'm going to say is when ICHRAs first came about, it was really a reimbursement only model, right? So employees buying their health insurance, they're receiving their contribution from the employer, and that reimbursement will go to that employee. The employee still maintains payments to the insurance carriers. They're managing that payment, but they're just getting reimbursed in a tax advantage model for the employer. You know, some employers that maybe are offering stipends may want to continue to do that. We do support that model as well, but really in the last, I'd say, 2.5 years or so, the really all-in-one solution has came about. You know, and it really feels like a group plan where really all the enrollments are done on a platform. You know, before that, time is spent with the employer to determine what contribution levels you're giving to those employees. Employees logging onto the platform, they're seeing a marketplace of health plans available to them and choosing one of those plans and getting enrolled in that plan. From there, if that contribution is less than the premium amount, then there'll be a payroll deduction, just like on the group model. So, you know, that's the majority of what's getting done, especially if a group an employer is moving away from a group plan, that really mirrors that type of solution. You know, when I've talked a little bit about structuring contributions, you know, sometimes there's some confusion around that, or just like, how do I determine how much I'm giving my employees? So really it comes down to kind of two decisions. Determine your budget as the employer, and we'll help determine what your contribution strategy is based off of what you'd like to do. And when I say that is, you know, do you want to give your employees all the same amount? So there's been some discussion about the marketplace, the ACA. The plans do cost more the older you are. So fact of the matter is, you know, if you wanted to give your employee base the same amount, maybe those dollars are going further for that younger person versus that older person. So that's why we see more and more employers are going to the age-banded model. Essentially, you're giving the employees the same amount of purchasing power to go out in the individual market and purchase a plan. You're taking into consideration their age, and your contribution is you know, reflective of that. You can also decide, you know, what you want to provide as far as a contribution towards dependents. You don't have to provide a contribution to dependents, but certainly that's out there. We help structure that as well. And then ICHRA class. So there is some flexibility in the regards where we see it sometimes where, you know, maybe there's leadership is on a salary, whereas day-to-day is paid hourly. You know, certainly maybe part of your employee contract is you want to pay a higher percentage for the salaried leadership. You can certainly do that. Or it also can take into consideration where people live. In certain parts of the state or other states, insurance might cost more or less than what it does. So we can vary your contribution levels by that. So a lot of flexibility there. Again, that's where, again, working with an administrator can help you really understand your options, and we can, you know, typically structure something that's going to meet everybody's goals. And then what's covered, right? You could do a premium only. A lot of that is what's being done on average, but you could also allow medical expenses to be reimbursed. So, you know, if you were offering a rich contribution, for instance, and an employee could enroll in a plan that maybe costs less than that, those extra dollars could be available for that employee to be able to submit for reimbursement for deductibles, co-pays, et cetera. So lots of options out there from an ICHRA. It really just comes down to, you know, understanding as an employer what you want to spend, and really customizing something that's going to fit your employee base. Now, everything's based off of the ACA, the individual health insurance market. Again, the metal levels really determine, as B had said, hey, a gold level, you have employees that want a richer plan, right? Less out of pocket, but they're going to pay more in premium. Bronze plans, vice versa. Hey, well, they want to keep money in their pocket. Maybe they're putting the additional dollars that they would have spent on a gold plan into an HSA or something. So, you know, that's important when we first talk about, again, contributions. And I wanted to illustrate this because when we start talking to an employer that's never been exposed to ICHRA, there is some confusion around, hey, what does that mean? How would I structure that? So here's an example. If an employer came to us and said, hey, I want to pay 50% of the lowest costing silver plan on the individual market. So essentially, if these were their 5 employees, we would pull the insurance premium rates for those and just do the simple math. So what this means in this light blue column, this is what the contributions that each employee would receive or is eligible to receive on a monthly basis, regardless of what plan they enroll in. So, you know, this model doesn't mean you're paying 50% of no matter whatever plan they enroll in. You're really determining what type of purchasing power. If these employees all enrolled in the lowest costing silver plan and I paid 50% of this would be reflective of their costs, but your contributions are locked in. So, you know, really simple to be able to do. And as you can see, you know, premiums do get more expensive for the older you are. And now, you know, a contribution model like this, you're paying kind of that same average for each of those employees. Really next, how would it ICHRA get administered? You're really going through that process. We're modeling it out. You're starting that process 60 to 90 days out. We've done them quicker than that, but just as a guide, really working on that contribution model, that budget, et cetera. From there, we're really preparing to roll out that ICHRA to the employees, educating them on what they need to do, when they need to do it by, and really trying to have that open enrollment, which is typically supported by licensed insurance agents, so they can, help them make that informed decision. Really want that open enrollment to end on the 10th of the month prior to the effective date, just as a guide. That allows, enrollments to all get submitted. People should be receiving their insurance cards pretty close to the first of the month, et cetera. And then on an ongoing basis, you can start an ICHRA anytime during the year, but open enrollment will always be in the fall to really coincide with the ACA individual open enrollment period. Some time frame within that November 1st to December 15th would be the annual open enrollment. And that employee, you as the employer would have the opportunity, because now we know what the next year rates are, what you'd like to increase your contributions by. Do you want to keep them the same? What did the market do? On average, the ACA market was pretty stable up until this last year. It did have a recorrection, but typically, especially in Minnesota, we're really seeing that single-digit increases on a year-in-year basis. Again, last year it did increase, and from talking to carriers, et cetera, thinking that things will go back to being stabilized. But really simple to be able to start the process and understand what your options look like and get that rolled out. So in putting this together, in discussions with B and the St. Paul Chamber, just like, hey, who are the other Minnesota ICHRA providers out there? A couple other ones. There's about 5. I think if you looked around the country, there's upwards of maybe 50 or 60 now. Lots of options out there. I'll talk a little bit about what we do here at Benafica and where we really excel. We're really touch point. But if you're looking for an administrator, you're going to want them to. This is what they do. They've got they're a true ICHRA vendor administrator. They understand compliance. They're looking out for us. Do they support what model you want? Traditional reimbursements or that all-in-one? Hey, is AI doing the selection and I'm having to go through that, or is somebody going to pick up the phone and help us walk through that process? Again, understanding and making sure from a compliance standpoint that things are being done right. So just ongoing support. At Benafica, that's what we do. I lead the ICHRA team. We've got a dedicated operations. We've got support, all of that. So, if there's a question that comes in, we want to make sure that it gets answered. If we're helping you do those insurance enrollments, your employee has a question, needs an insurance card, et cetera, they're calling directly into their agent that helped them enroll in that plan. So we handle everything for you to be able to set that up, go through that process that I've kind of outlaid, making sure that we're getting it started when really you want to. So, our platform, our all-in-one is Ben 360, really simplifies that whole process for that employee. Obviously, there's a lot of moving parts within it, but when it's platform-based like that, it's pretty tough for an employee to get lost in the process. Just need them to set up a password. They can get in there. They'll see how much they qualify for. They'll select and enroll in their health plan. And then all of the billing and administration is handled behind the scenes. So pretty seamless for the employees. If they had a traditional group plan, there's a little bit of a learning curve there, but typically once we get them into the system, they start to understand, and we provide the support for them to be able to do that. So, again, not going to spend a lot of time on here, but you'll have those same features if you were offering a group plan that you would want. You want to be able to see what plans people are enrolled in. You want to be able to get the reports, want to make sure you're compliant. all of those types of things. So, that's really what we do here at Benafica. And then, I'll let Charlie touch on, why working with a risk advisor, is sometimes advantageous to you.
Yeah, thanks, Troy. Troy, I'm going to ask you a question. So, of the groups that you guys work with, the ICHRA groups, how many are come through a benefit consultant or a broker, percentage-wise?
Yeah, I'd say we're at about 85% through a benefit consultant broker are coming our way.
Yeah, so you have a choice as an employer, but the reality is one of the things that we do, certainly Benafica is one of our preferred providers, but we work with a variety of different ICHRA vendors. So our job is to be objective. Our job is to be independent. Not every ICHRA vendor is the right fit for every employer. So that's part of what we do. We continually vet out different ICHRA vendors and try to find the right one for you. So we're objective, we're independent. That's just one piece, but Troy would agree with this, but any benefit that you offer your employees has a lot of fiduciary responsibilities. There's a lot of compliance. And so there's a lot of resources that we, from compliance, based on the size that you are, based on the type of plan, we create a compliance dashboard that makes sure that you understand what your fiduciary responsibilities. I'm not going to get into the details, but since if you do go to an ICHRA plan, you have an HRA, you have to do a PCORI filing. So they're little things, but they're big things. So our job is to help you make sure that you stay compliant and provide the reminders. We have an HR hotline. So Wagner, Faulkner, Judd is our HR partner. So you have access to for day-to-day type of questions. We can do employee handbooks at no cost, but I'm not going to go through all of it. We get technical benefit related questions that I'm not an expert, Troy's not an expert, but we have a legal team that can answer your day-to-day types of questions. Benchmarking. So benchmarking is a big deal. So we're very fortunate that we have this relationship with Milliman, which is the largest actuarial company in the world. So we can make sure that what are other employers our size? What are they doing on the contribution side? So I'm not going to go through all of them, but that's the value while you work with a benefit consultant, is to provide resources to make sure that you're meeting your fiduciary responsibilities and that you're compliant.
Perfect.
Great. Was there a question that came in?
No, I added a comment about administrative requirements. So I wanted to add color to that, and then I wanted to ask a question and encourage other people who are listening to actually ask questions, because these guys are great. When we approached our exploring what our options are in the face of such a untenable budget expectation for 2025, I was really candid with Charlie and Troy both, pretty animated about it. Like, I will be straight up with you. I'll tell you what I don't know, and which is frankly not a lot. And I have a lot of skepticism about who this Troy person is and what he's trying, So, and they were just great. So I would just encourage, when you talk to your broker or these gentlemen, whoever you get your support from, large or small, be candid. Like, we didn't know. I was afraid, ICHRA is it going to be a one and done thing? Because what I didn't want employees to have to keep changing plans, because that's more interruptive than anything else, is to go from this plan from this year, and then you have to find a new provider and a new clinic, all the things if you switch plans. And so I wanted to make a decision that would be stable for employees. And since I didn't know about ICHRA, my assumption was it might be a one and done or a hit and run, whatever that expression is. Can you, looking for questions, but Charlie or Troy, can you highlight a couple of the key concerns? You already mentioned administrative burden, and there were some things we had to learn. I mean, we were clumsy about it. So one of the questions I would ask your broker is, what does your customer service support look like? Because I think Della is actually logged into this today with you from your team, Troy. And we have found that I love Charlie and I love Troy, but I tell you what, I would not give up Della. Why? Because it's the people who are working with you month to month, questions about your billing and questions about new employees who can't get signed up correctly. And, you know, what does it really mean as it relates to reimbursement rates from one state to the next? They need to make sure that there's a person who can help. So outside of that, we've found the administrative burden to be manageable. We've got great customer service. What are some other common questions you hear from kind of fearful people like I was?
You know, I think the biggest thing is they're afraid that their employees aren't going to be able to understand it or figure it out, right? Either, you know, we're kind of that hey, I want to hold every employee's hand on it, and I'm afraid to kind of let go and just trust that they can make an adult decision about what plan is available. And we've built our system and our process around that, understanding, you know, people are not insurance experts. They don't need to be, right? So when someone logs into the platform, you know, they are shopping, and we really, recommend and put that process in place. Like, we want you to talk to a licensed insurance advisor. We don't want insurance to be scary. With a few questions, that advisor is going to be able to narrow down that plan option specifically for them. So, you know, that piece right there is important, and I can't stress it enough as far as having a partner that picks up the phone, that understands the process, and you know, things are important if the employee is asking for it. So, you know, our process, we want employees to have direct access to the advisors, which isn't the same in every, you know, ICHRA advisor. Some you're calling into a pool or a phone bank, but we want to have that relationship. As far as you as the employer, it's the invoices, it's the dollars moving. Employees are probably coming to you with questions. Where do you go, and how quick can you get them the answer so they can get back to work? That's the most important thing, and that's typically that the where the time is spent a lot to really show how we've designed this process to be able to answer those questions quickly.
Here's a question that's come up for us, which has been weird, is because you say that the employee owns the plan, Kyle owns the plan. That means when the employer is paying the premium every month, the employee is getting communication from the health provider that they didn't before. So I would say that would be one of the confusing things, which is, yeah, I get an email from Health Partners. I chose Health Partners, you know, whatever. Yep. And say, you know, your invoice is due. And I'm like, well, what do you mean my invoice is due? My employer pays my health care. So I would say that's one area of, because it's my plan, I get status on invoices, though I don't pay them. So more than once, we've had to communicate back to our team, okay, Della, just double, triple checking in case I'm not doing this right. And she always assures us, no, the employee gets the invoicing and communication, though the employer pays, and that is just a communication thing.
Yeah, thanks for bringing that up. Yes, ICHRA is evolving. Carriers are starting to take notice and really are building programs and processes around it. Yeah. You know, when I don't think carriers really expected ICHRAs to take off as much as they did, and you know, they're a little bit behind now. So because the employee does own that plan, they do still get notices, and it does create some confusion. We know that, and we've had many discussions with employers to be able, or carriers to see if there's any way around that piece. But as it sits today, just due to HIPAA and other requirements, they do need to get that. So it really is a constant education process. Like I said, carriers are getting more interested in ICHRA and really, setting up departments internally to simplify enrollments and payments. So it is evolving. It'll look much different even if we go down and look at 2 to 3 more years from today, because it's a lot different than what it was back in 2020.
One of our viewers asked a question about administrative fees, and that's another thing I really encourage people. Ask the hard questions. I was really bald with Charlie and Tora. I need bottom line. Tell me everything. Sure. I don't want to say, oh, by the way, and they were great, but asking the questions to ensure that those fees are all rolled in so folks know exactly, and there are no surprises to the greatest degree possible.
Yep. So if you'd like a quote or have specific questions about, what type of administration you're looking, please reach out to me, Charlie. We'll be able to help put that together for you so we can get you accurate numbers, definitely.
I have another question. Please, folks, ask away. I'll ask for you, but I would like to see yours show up in the chat. So let's talk about timing. It's now April. We're going to hopefully post this again for our membership later in the year. So folks have this resource. Someone who's curious about this and then having to make a decision about this. What does the year look like for timing?
I think two ways. If you're curious about it, ask now. Give us a call. Let's start the discussion. So it's not a rushed decision. There is time to just better understand. It gives us as the administrator, or Charlie as the broker, to be able to understand what you're looking for and educate and walk through that process to make sure we get it right. So the conversation can start anytime. As far as timeline being, some of this I'm going to answer going to be based off of how large of a company you are and how many employees we have to get through the process, et cetera. But 60 days out typically is enough time. 90 days out is ideal. We start seeing, and we're doing ICHRAs right now. It doesn't always have to be in the fall or for 1/1. It can be anytime. If you've never offered benefits before, we would have a conversation today. We'd be looking at a June 1st effective date, most likely. If you do have a group plan and you've got a renewal in September, we would want to start having that conversation late May, June into June. July 1 at the very latest, probably, to be able to help you get to that and arrive at that decision.
Mm-hmm.
New rates for the individual ACA market. We typically get some view in on those in October. They don't become public till November 1st. We'll have an idea of what carriers submitted for their rates. About June, July, we're able to at least see this, hey, they submitted a 5% increase, a 10% increase, at least gives us an idea of what it looks like. So I can't urge you enough, start the process now, at least have the initial conversation.
Yeah, can I add a couple pieces?
Yeah, great.
I think it's always, one of the things that I'll say, it's different, right? I mean, we keep saying it over and over, going from a traditional group plan to an ICHRA plan, it's different. There's times, to be transparent and honest, it can get a little bumpy. We talked about some of the bumps. We talked about maybe some of the challenges, but just know that if you hit a bump, come to your broker, come to your Benafica, rather than just saying this stinks, we don't know what we don't know. And if and Troy and I have Troy and Della, we have these conversations that, sometimes you get this notice from the carrier, like, what's going on here? And why is the payment delayed? And again, when you let us know, then we can do something about it. And when you think of insurance companies, most of them have the financing set up more in a group chassis. Whereas we're trying to make this ICHRA plan look and feel more like a group plan. But part of the challenge is that they mostly identify individual bank accounts. And I'm not going to get into the logistics. It evolves and it's getting better, but I just want to be transparent and open and honest that occasionally you'll run into bumps. I think the other thing that is a challenge for most employers when they go from a traditional group plan to an ICHRA plan, they're out, so to speak. Really, the only decision they're making is the financial part. And there's part of them that love that idea, but because these are individual plans, you can't advocate on the behalf of that employee. That's where you have to bring your ICHRA partner and your benefit consultant into the mix. So I just want to be open and honest and transparent that you'll occasionally hit bumps, but you'll find out how good your partner is and how quickly they can resolve things for you. The last thing that I'll say, there's a ton of ICHRA vendors out there, and I will say this: there's a lot of bad ICHRA vendors out there. So make sure that you vet out your ICHRA vendors properly. And I would encourage you to work through your benefit consultant to help you, look at it objectively and help you. And I said, this is the last thing. This is a good time to look at it. Now I'm going to give you one quick example. I know we're coming up on our hour here. I have a client that's renewing in July that went from that fully insured plan to level self-funding. They're getting I want to say a 29% increase. So right away, this is just like, it's getting to the point where it's costing too much. And it's not in all scenarios, but the rates were so low, even with that 29% increase, it was still less than the individual market. So again, you'll get some scenarios where it doesn't make sense, but you can at least look at it now to compare how your group plan stacks up against the ICHRA plan from a cost perspective. So again, I just wanted to add a few additional things into this conversation.
That Charlie and Troy, thanks, more thanks than you could know for the time. Kim, I'm going to turn it back over to you. Wrap us up. Really appreciate it.
Yes. All right. Yes. Thank you so much, Troy and Charlie, for sharing that information with us. Before we go, I just wanted to send you guys to our events page if you're looking for more content relevant for you and your business. Next week, our members at Green Cities Accord will be putting on an in-person summit at this St. Paul River Center focused on sustainability for businesses. Of course, we've got our Small Business Summit Expo coming up on May 8th and a number of other really excellent events that you can find on our events page that I just shared in the chat. So thank you all. Have a great day. And if you want to revisit this recording, it will be available on our YouTube page and we will be sending you a link to it as well. All right. Thanks, everyone. Take care.
Thanks, everyone.